Hey everyone, welcome back to Corporate Decoder. Today NDAQ just filed an 8K, and I am seeing a key update regarding their financial performance and shareholder returns. Quick note, this is not financial advice, just my take on public filings for educational purposes. Nasdaq is out with their first quarter results, and we're diving into what these numbers might mean for investors. This is a current report filed by Nasdaq Incorporated. Essentially, it is a way for them to quickly share important company news with the public, especially when it comes to financial results or significant events. Today, Nasdaq is reporting on their first quarter of 2026. Nasdaq, as you know, is a major player in the financial world, operating stock exchanges and providing market data. They are a big company with a lot going on behind the scenes. This part lists the different types of securities Nasdaq has registered to be traded on public exchanges. We see their common stock, which is traded under the ticker NDAQ on the Nasdaq stock market itself, and even on Nasdaq Texas. They also have several different series of senior notes, which are essentially long-term loans they've taken out, each with different interest rates and maturity dates. For example, they have notes due in 2032 with a 4.500% interest rate, and others due in 2033 at a lower 0.900% interest rate. This shows a diverse mix of debt financing. This is where the meat of the financial news is. Nasdaq issued a press release on the 23rd of April 2026 to share their financial results for the first quarter of 2026. This is crucial for understanding how the company is performing in the current economic climate. We are going to look at what their earnings report is saying. So, what did this press release reveal? While the actual numbers aren't in this filing document, the fact that they're releasing them today means we can look at external sources for the key takeaways. Based on recent headlines, Nasdaq stock was up on this day because their Fintech and index segments really drove their first quarter earnings beat. This means they likely performed better than analysts were expecting, which is always a good sign. Regulation Fair Disclosure, or Reg FD, means that any material information released to the public must be broadly disseminated. Nasdaq posted slides for their earnings presentation on their investor relations website. This is common practice to give a more visual and detailed breakdown of their performance. Here, Nasdaq announced the declaration of a quarterly cash dividend. This means they are paying out a portion of their profits to shareholders. This is often a signal of financial health and confidence from management about the company's future ability to generate cash. The declaration of a dividend is a direct benefit to shareholders, showing that the company is not only growing but also returning value. We often see that companies with strong and stable earnings are able to consistently pay and even increase their dividends over time. This section lists all the documents attached to this filing. You can see they've included the press release about their financial results and the one about the dividend. They also include an interactive data file, which is helpful for digging deeper into the financials if you wish. Now, looking beyond this specific filing, we can see some broader trends. Even though Nasdaq's stock price has seen some ups and downs, with one headline mentioning it is off its highs despite strong results, the underlying financials seem to be holding up. Institutional investors like Vanguard and Investor RB are holding significant stakes, suggesting confidence from large financial players. What is really interesting is that even with a strong earnings beat, there are still differing opinions. Some analysts feel the stock is still overvalued. This often happens when a company performs well, but the market has already priced in a lot of that future success. The company's market capitalization is quite large, around $49.3 billion. And their P/E ratio of 28.0 indicates that investors are willing to pay a premium for their earnings, perhaps expecting continued growth. With nearly 9,500 employees, Nasdaq is a substantial enterprise. The fact that Nasdaq is able to pay a dividend while also investing in its growth segments like Fintech and its core exchange business suggests a well-balanced financial strategy. The diversity of their debt, with notes maturing at different times and rates, also helps them manage their financial obligations effectively. The risk I am watching is how Nasdaq will continue to innovate and adapt in the rapidly changing financial technology landscape. Competition is fierce, and staying ahead requires constant investment and strategic moves. What I am actually looking for is sustained growth in their higher margin segments and a continued ability to return capital to shareholders through dividends and potentially share buybacks. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, please like this video and subscribe for more. Join our Discord community, linked in the description below.